Welcome back to Health, Wealth, and Lamborghinis. My name is Jason, and here we are trying to build a dividend portfolio that will essentially pay for a Lamborghini. Now, like I say in every video, this is going to take some serious time. However, this month, I have made a pretty big purchase into a company that I think is going to help propel us on our journey even faster. So, jumping right into the portfolio, you can see here we got a value of about $225,000. We are up a little bit in this account by about $4,400, which is not too bad. We are underperforming the S&P 500, but I'm okay with that right now because most of my retirement savings is in the S&P 500, and that is in my TSP via the Navy. So again, in this account, you can see we are generating $10,000, almost $200 annually, which is not too bad. This is a dividend payout of about 4.5%. Now, a lot of this is sitting in my money market account, making about 5.3%. So this number will be slightly skewed. It will probably lower as we allocate more of my cash position into the market, but we are starting to do that, and you'll see here with this buy. Now, today we are talking about the one and only Starbucks. This is a company I have been buying for quite a while. However, after its recent pullback, which was pretty rough on the stock, I have actually bought quite a few shares. Now, way back in March, you saw I was kind of buying in here, $90 a share, $90 a share, $89 a share, $87 a share. I bought 5 of them there. Bought 5 more shares at 85, a couple shares at 84, another share at 85. Now, I was happily buying Starbucks when it was in the low 90s, high 80s. And then all of the sudden, they did not have the best quarterly earnings report. And in fact, they got roasted, no pun intended, by Jim Cramer.
Is it not time to pause, sir, and figure out what's really going wrong and spend a deep dive and making it so that this decline in comp store numbers does not continue? Because it is perilous to the actual existential existence of Starbucks.
The aftermath of all of that sent the stock price plummeting into the low 70s. $72.50 was the low. And you can see I bought 30 shares at just under $76. Now, what's cool about this price is the dividend yield actually touched over 3% in this stock, which is pretty rare. So time went on a little bit more. I did pick up a share at $72.35, basically the insane low here. And then again at $76. And then I think we went to Starbucks and I picked up another share at just under $75. Now that brings my total share count to 66 shares of Starbucks. With the recent pullback, I have more than doubled my position, which has driven my average cost per share down to just $82.60. Very happy about that. I could have bought more, and in hindsight, you never know. Maybe I should have bought a bunch more at $72. However, I'm very happy with this position in my portfolio, and you can see that Starbucks is making up about 2.3% in my total portfolio. So not a massive position for me, but it does have a little weight. So looking 1 year ahead, you can see that with 66 total shares, I'm going to be getting paid $150.59. Now, of course, I'm going to just reinvest all that money into Starbucks. That'll actually pick me up about 2 shares at this price. And my yield on cost right now is 2.76%. Not too bad. Now, the great thing about Starbucks is they have been growing their dividend very consistently. You can see here back in 2010, they were just paying 18 cents a share. Fast forward 14 years, and they are now paying out $2.28. Now, if you look at the 5-year dividend growth average, we're looking at just under 9%, which is fantastic. That well beats inflation, and that's going to give me a raise just for owning Starbucks every year. And I'm pretty confident that once all this bad news blows over, Starbucks regains their footing in the coffee market and everything like that, I'm confident that the stock price is just going to continue climbing. So not only will I have share price appreciation, but I'm also going to be getting an increased dividend year over year. Now, I have been buying into Starbucks since January of this year, and it is pretty cool to see that just about halfway through the year, we're already over 66 shares. I would love to build this position to a little bit stronger foothold in my portfolio, but I'm going to take my time and kind of see what the market does. So today is the 27th. You guys can see here on the 31st, I will be receiving another payment from Starbucks in the amount of $37.08. Now, this one is pretty nice because my last payment from Starbucks earlier in the year could not have even covered the cost of one flat white. I think it was $4 or something like that. Now, making close to $40 a quarter, that'll basically buy a flat white every week for a month. Now, I'm just going to be reinvesting the dividends, of course, but it's nice to see this snowball starting to build up. Now, yes, I'm allocating some capital to that, and of course, the price is going to go up and my dividends received is going to go up, but over time, this is just going to get bigger and bigger. So let me know down in the comments, are you buying Starbucks right now at this pretty big pullback? I have a feeling in a couple years, we're going to look back at this price and people are going to be wishing that they got in, but maybe that's just me. Thank you guys so much for watching. See you in the next episode.